dynamic or moving support and resistance. So they move along with price, give us a calculation of the 50 days of the average price. That's where the magic is because it's calculating the average or median of price. So the 50 is good because it's right about 2 months worth of data. So you guys will have an average between the past 2 months, and then we get into a little deeper of a discussion called mean reversion trading. So the market is always looking for a balance. So when you see these impulses, we call them impulses. The market, that's why you get a retrace because the market likes to correct. This is an imbalance in the market, pushing the market, to an extreme. The reason why we have those extremes is that you have more aggression on one side or the other. So either bears come in more aggressively, or if we're looking up, the bulls are more aggressive. Uh, One facade we always have in the market is that that they feel like the sellers won or there's more sellers. There's always an equal amount of buyers and sellers. One is just more aggressive than the other. That's the way we facilitate trade. So if someone wants to sell, somebody has to buy. I know that it took me a while to grasp that concept myself because I'm like, okay, why is it dropping or somebody's losing? That's what I used to always think, like somebody's losing. Why would somebody want to just lose money? But that's not the case. People are facilitating business in this model, and we get a visualization on these graphs. So somebody may have made an acquisition where they had to change over um, ADI to or yen to ADI or ADI to yen. That's going to be what the whole exchange is. So they had to make that transaction. Somebody wanted to buy a business. Let's say hypothetically, somebody wanted to buy a business in Japan that lived in ADI. So they made a call over to their bank, aka the broker or whatever financial institution, and they started facilitating their trade. They said they wanted to put it in at a certain price. They got that trade started going, and it starts to move. Now, this is just a concept, but it helps you guys rationalize what's going on the chart. So they were more aggressive. He didn't care what price. He wanted to just get this business done. And, he don't mind the price dropping because, the yen went up. So he went from ADI money to yen money, making it a more, making the yen way more, or making the yen worth more value. Sold the ADI, switched over to yen, so there's more yen than there was AUD, and it caused the AUD JPY to drop. Start looking at the concept of like the seesaw. You have AUD here, yen here. We're looking at strengths. Which one's going to be stronger, AUD or the yen? If the AUD was stronger, not draw it just for kicks and giggles. Um, a lot of these concepts, once we get it, it's gonna make your trading a breeze because you're gonna stop just looking at these assets like um, pairs, and you're gonna start looking at them like future traders or institutions look at them. They look at them like single currencies. So that's a little bit more in depth of a lesson that's currency strength. But I want to get you guys to that point. I just want to make sure that everybody's on the same level. I don't want to dive too deep and leave anybody behind. So, we can spend time in chart patterns or whatever we need to until, or, whatever area. So everybody, the roughest part is getting familiar. And what a lot of people know, we're getting familiar with the mechanics of operating, let's say MT4, operating trading view. And that's how I look at, chart patterns, technicals, um, even some strategies. Like it's just the mechanics of actually operating and facilitating or executing a trade. Now that's one basis of trading, but you guys want to know the concepts are the macro, I would say, of the actual process of trading. So why that's happening to make a more informed decision. So um, it does also go back to this is speculatory, so no one can be right 100%. Um, I'm getting back. I wanted to. They drove me to try to make sure that I teach you guys.